Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Thank you for your patience. I had to sort out some personal issues behind the scenes before I kickstart this session because if I don't, I will be getting some disturbance, some hindrances during the course of the session. So I had to sort them out before we kickstart. So that is why we are coming in a little bit later than expected. So I'm excited to be here with you this morning as we gear up for the second trading day of the week. And in fact, the last 24 hours has been mixed. We has come with mixed reactions as we had some little bit of traction in favor of the US dollar yesterday, but it didn't last long before we started seeing price action doing the opposite of what it was doing. Then on the USOILSPOT, we had some profit yesterday, though price did come back into our entry point. And if we did move our stop losses accordingly, we must have been taken out with a significant or reasonable amount of profit. We will be looking at that in a moment. On the XAUUSD, price is still struggling at this point, and the momentum still looks very bullish. But we will be looking at today how we will be managing that position and see if the chances that this bullish momentum will continue to the upside. So in preparation for today's trading session, I have indeed behind the scenes, of course, conducted a comprehensive analysis of all of the assets on our watch list using simple and fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action today, and of course use the data we find to strategically position ourselves for today's trading session. And for those of you who are with me on both my TradingView and Telegram platform, you definitely must have gotten an update as to what we will be doing today, and we will be expatiating on that later on today. So thank you guys, and for those of you who are joining us for the first time, I'm very sure you will be wondering what this is all about and what is it that we usually do here. Well, to simply put, I usually share a couple of videos during the course of the weekend which actually indicates my plans for the new week. And of course, during the Forex Morning Mastery, we come here to review. We come here, gather as a community to follow up and review this position. And of course, if we do have any existing positions running, we see how we manage them. And of course, look out for new opportunity as we get prepared for both the London and the New York session every day. So the session usually kickstarts about 9:05 a.m. West African time, 8:05 a.m. UTC, and in fact I recommend that you stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. And it is very important to note here that my aim is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us in this community, the better you get to comprehend our analytical approach and utilize the information gathered here to make your own trading decisions and strategies. So once again, I welcome you all on board and encourage you to engage in the comment section. So with that being said here, before we dive into our daily routine, I can see a couple of comments here from Jonah Aruna. Good morning to you. Kelechi, good morning to you. Glad to have you around with us. Then I can see Ivan Gobunovas. I hope I pronounced your name correctly. I'm very sure you are new with us this morning. If you are, I'm glad to have you around with us. Then I can see Ronald Kalmin saying that you should restart real-time price action monitoring because it has been showing data from the previous trading session for a few days now. Okay, I guess you're missing it out. The XAUUSD real-time monitoring window usually lasts for about 5 to 7 hours, and by the 7th hour of the New York session, we should have concluded on that session. So we usually have new session come up every day. So the new session for today, I will be sharing the link in the comment box very soon. So you can click on that link, and 5 to 10 minutes into the New York session, we will be kickstarting that live window. So it usually starts afresh on a daily basis. So I will be sending the link, and please stay tuned in so you don't miss out on the link. Thank you, Carlmin. And then Torres Master here says, good morning. We are out. You've come again with your narrative. Thank you very much. I really do appreciate your support and passion for this session. Thank you very much, Torres Master. Hello, Hadeni Babalola. Good morning to you. Oh my goodness, I'm so sorry, Adeni. I will do that. I promise you I would respond to your message today, okay? I'm so sorry about that, please. Okay, Eric Mudavadi, good morning to you. Thank you very much for checking in on me. And on this note, I think we're done with the comment section, and so let's dive right into our daily routine. So as usual, the first thing we normally do in this session is to keep tabs with the fundamental factors that will be driving the market sentiment today. And as a result of this, we do usually check on the economic calendar. And of course, you do know that these fundamental factors often manifest on the charts in technical patterns and price movements. Now, by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on this asset for this week, based on the asset we have been monitoring for this week, we will be focusing on both the United States and the United Kingdom economic docket. In fact, we usually look at high impactful event, but in days like this, which does not have any high impactful event, we take it a little step further to include the medium impact event, which is what I will be doing right now, to ensure that we have an idea of what market participants will be looking forward to today to guide their trading decisions. Now, if we look at the medium impactful event, we have two economic features from the United States. Now, the first one, in fact, they will be coming in simultaneously, and the first one is coming in about 4 to 5 hours from now, and that is the building permit. Now, the building permit is released by the U.S. Census Bureau at the Department of Commerce, and of course, this data shows us the number of permits for new construction projects. Now, it implies that the movement of corporate investment, that is U.S. economic development. Now, this gives us an insight into the housing sector of the United States, which of course is considered to be one of the most sensitive sector in the economy. That of course gives us an insight into consumer spending. Now, generally speaking, a growing number of permits indicates positivity to the United States economy, which of course will dovetail to positive traction in favor of the US dollar. Now, if we look at the figures for the previous month, that is the month of October, it came in at 1.498 million. Now, we have consensus projecting 1.47 million, which is a little bit lower than the previous month. So, based on what economists have on ground, it shows that there is likely going to be a contraction in that sector. So, we look forward to see what the actual data will be. Will it be just as expected, below expectations, or even beyond expectations? Then simultaneously, like I said earlier, we are also going to be witnessing the publication of the housing stats. Now, this is also released by the same department, and of course, it is an indicator that tracks how many single family homes or buildings were constructed during the period of a month. Now, for the survey, each house and each single apartment are counted as one housing start. Now, generally speaking, a high reading anticipates positivity to the housing sector, and of course, which will dovetail to a positive traction in favor of the US dollar. Now, let us look at what the previous month says. The previous month of October came in at 1.372 million, and we have consensus projecting 1.36 million, which is also lower than the previous month. So, economists are expecting a contraction in the sector, and of course, we might likely be seeing another tumble in the US dollar for today, but we can't jump into conclusion yet, as it depends on how market participants anticipate this event and of course react to the outcome of that event that will determine where price action will be going. And of course, as technical traders, what we want to be doing is to ensure that we sniff through the current market structure to identify patterns and structures that we will be using to position ourselves for the next move. Now, with that being said here, and with the information we have gathered, let's scale into the chart and let's look at things from a technical standpoint. Now, the first asset we will be looking at today, as usual, is going to be the US Oil Spot. And on the US Oil Spot, we have quite an interesting situation going on in this market. As we saw at the beginning of the week, we were initially selling the US Oil Spot. Remember, we sold at the breakdown of the support line of that range had the $71.96 level, as you will see right here. And in fact, price action moved about close to 100 pips on that single move, and in fact it was a profitable trade for majority of us in this community. And of course, if you had moved your stop losses accordingly, you must have been taken out at a minimum of about 50 pips at least on this particular one, and congrats to everyone who took advantage of that opportunity. Then immediately price action tested that ascending trend, that descending trend line. Remember, we talked about this yesterday, that as soon as price action gets into this trend line, we should ensure that we secure all current sell positions, as depending on how price action reacts to the structure will determine if we will continue to add more sell positions or get ready for another wave of bullish momentum. But the fact that price action was still trading below the ascending trend line we spotted here yesterday, thanks to Kelechi, who reminded us of this ascending trend line, it wouldn't be making any sense to to buy below that structure, as we will need price action to climb back above that ascending trend line before we can start considering buying that asset again. Now, with that situation, we saw this engulfing bullish candle breaking up, reaching high, and then breaking out of the resistance zone we identified during our live session yesterday, which is basically between our key level had a $72.50 area and the $72.60 level of the resistance line of that range. So price broke out of the structure, triggering our first buy position for the week. And as you will see, price action did move over 200 pips on that single move, and I do hope you moved your stop losses accordingly. If you did, you must have been taken out with a minimum of 100 pips, worst case scenario that will be at that point in time. And for those who capitalize on this opportunity, well done, and kudos to you for being on standby to capitalize on this move. Now, at this point in time, you should not be in any position right now, as we saw the bearish momentum come in yesterday, taking us out of all the buy position. And of course, this may likely be a retracement of that bullish move. But as it is right now, the outlook on the US Oil Spot still remains very, very bullish. And in fact, if we look at the fundamental factors behind the scenes, and including the geopolitical tensions in the Middle East, it appears that the oil may likely be on the verge of continuing an uptrend continuation. Now, for those of you who are with me on my TradingView and Telegram platform, you definitely have gotten an insight into this economic developments behind the scenes that are affecting this asset, but I will run through them quickly in a moment. Now, as it is right now, oil prices find support amidst geopolitical disruption impacting trade and supply costs. Now, a recent attack by the terrorist group, the Houthi militant group, of course, on commercial vessels near the Yemen contributes to the complexity of this market landscape. Now, notably, I did mention this yesterday that the Russian government committed to extending their cuts to 50,000 barrels per day, besides the 300,000 barrels per day, which they announced during the previous month. So we have a total of 350,000 barrels cut in oil production from the Russian government. Now, what does this mean? It impacts the global supply. Reducing the supply, of course, will definitely increase demand. And when there is an increase in demand, what happens? Price will definitely rise. Now, looking ahead, market participants will be anticipating the publication of the API weekly crude oil stock and, of course, the EIA crude oil stock change for last week, which will be coming up today and tomorrow, respectively. Now, what the data says here will be giving us an insight into the strength of supply or demand in the market, and this definitely will be affecting the market sentiment. Now, given this development, we're definitely going to be maintaining a bullish bias, looking at things from a technical standpoint. Now, going back into the chart right now, you will see that price action still remains above the ascending trend line we spotted here yesterday, as you will see right here. And you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we shall continue to look out for patterns and structures that support the idea of buying an asset. Now, with what happened yesterday, we saw how price did break back above the ascending trend line, moving over 300 pips along the line, as you will see this massive impulsive move all the way into the $74.60 level. Now, at this point, we expect that at some particular point in time, price may go through some retracement phases, which could be as a reflection of profit-taking activity. And of course, we saw what happened during the later part of the New York session, as we saw price action come back into both the ascending trend line and that range we identified at the beginning of the week, which confined price action within the $72.60 level and the $71.90 level. Now, price is back into that area and in fact has been retesting the resistance zone of that range, that is between the $72.50 level and the $72.60 area, which interestingly shares a beautiful confluence with the ascending trend line we marked out here yesterday. Now, for me, I still hold on to the bullish bias as long as price action remains above the ascending trend line. So buying anywhere around this area makes quite a lot of sense, and we look out for more opportunities to capitalize on this move. So as it is right now, we maintain a bullish bias here. We still keep buying above the resistance line of this particular range. And if price action continues to climb, I think around the $73 level, we definitely want to be adding more positions to our existing trade. So let me mark that level out here. So we have the $73 level duly marked out at this point. I encourage you to also mark out this level on your chart, as you will be needing it as a reference point to guide your independent trading decisions for today. So marking out that level right there, looking out for more buying opportunities above the structure. And in fact, if price action continues to climb new highs, I will be looking out for more opportunities to add at the breakout of the $74.50 level, which happens to be the highest point price action has been for this week. And of course, there are chances that we could still have some more levels after the breakout of the $73 area, even before price action gets into the $74.50 level. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as to what levels we will be adding more position when the market present them to us. Now, with all this in mind, with all these bullish expectations in mind, we still cannot ignore the potentials of sellers. Of course, you know how we do it in this community. We try as much as possible to keep a balanced perspective to whatever decisions we are making. In as much as buyers have a chance, we cannot ignore the potentials that sellers can also take over this market. Now, what is it that we will look out for on this chart that will make us feel comfortable changing our bias from bullish to bearish? Well, remember that at the beginning of the week, we did talk about this key level had the $72.50 area, which we did identify on a higher time frame. Now, for those who are joining us for the first time that have missed out on this illustration, I encourage you to watch my video from yesterday's trading Forex Morning Mastery, where we did do a top-down analysis on this asset and of course identify the key level. So if you do want to understand why the key level is situated at the $72.50 level, you can check the link to my video yesterday right in the description box of this current video to check it out after the end of the session. So if we want to consider selling here, personally, I would need price to break down our key level. And of course, you know how we use our key level. When price breaks down the key level, we definitely want to be looking out for patterns and structures that supports the idea of selling. Now, with the situation we have here, price, the key level at the $72.50 level also shares a confluence with that ascending trend line. Now, if price breaks down the ascending trend line, that will be a beautiful signal that the trend line may no longer have the capacity to continue to negate the bearish attempt, hereby welcoming selling opportunities. So what I will look out for here is price breaking down the structure, retest of structure on our lower time frame, which will confirm that buyers are finding it difficult to climb back above the ascending trend line. And if this happens, we join a bearish momentum, and then we can add more sell positions at the breakdown of the $71.96 level. Now, there is a caveat to this bearish bias here. If price action continues to drop, remember that we talked about this descending trend line, which is still going to be playing a major role in determining the direction of price action for this week. Now, if price action continues to drop, let's ensure that as soon as price gets into the structure, which interestingly shares a confluence with the $70.60 level, a level which we identified on a higher time frame yesterday. As soon as price gets into that level, secure all sell positions while we wait and see how the market will react to that structure. And of course, depending on what happens here will determine if we are going to be adding more sell positions to our existing trade or getting ready to buy at that particular point in time. So this is my simple view on the USOILSPOT today. So our center of focus still basically stays around that key level at the $72.50 area, and of course the ascending trend line we spotted here. So depending on what happens here, let's allow this candle to close. About 4 minutes left for this candle to close, but I'm already in the buy positions here. I've already risked a buy position since I've been profitable so far, so I can still leverage on some of the profit I've made so far this week to test waters around this particular area. So this is my view on the USOILSPOT for today. So I do hope we mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. All right, so I can see a couple of comments here. Aaron Pecky, good morning to you, Aaron. Trust you're doing very well. Glad to have you around with us this morning. Kelechi says, I look forward to. All right, I'll take that as a compliment. Trust me, with time, you get to know how to do this. This comes with time. The more you look at the chart in correlations with the fundamental factors on a daily basis. In fact, as we do this together every day, you're already subconsciously getting yourself acquainted with this kind of analytical approach. So I'll take that as a compliment. Thank you very much. So, in the absence of no further questions, I want to assume that we are all on the same page, and in that regard we shall be moving on to the next asset on our watch list. But before I do, please click on the like button if you have found this content helpful so far. In the last 30 minutes we've been talking, 20 minutes I think we've been talking now. Please support the project by giving the video a thumbs up. Your likes are very, very important, and of course this is the cheapest way you can help this community to grow. So I look forward to your likes in the comment section at the bottom of your screen. So click on the like button. Thank you very much as you do so. So the next asset on our watch list for today is the GBPUSD, that is the cable market. And remember that yesterday we were in a sell position after price action broke down the 1.266500 level, as you will see right here, which was actually the support line of that range we identified at the beginning of the week. And in fact, price action moved about 37 pips before the bullish momentum started coming in. And I can remember vividly that I mentioned that we want to be very mindful of the sell position as we are within a strong bullish momentum. And in that regard, we did identify a zone which was the golden zone area of that impulsive bullish move that started last week Wednesday. Remember that we did use our Fibonacci retracement tool. For those who watch my videos on the GBPUSD this weekend, you would be familiar with this idea. So we use this Fibonacci retracement tool, run it through the impulsive leg, and of course aim at that area between the 50 and the 78.6% of that impulsive move as an area to look out for buying opportunity. And I did mention here yesterday that depending on how price action reacts to the zone will determine if we will continue, we will get ready to buy. Now, we were looking out for reversal pattern anywhere within the zone to give us an idea that it is time to get ready to buy. Now, if you look at what has been going on here, you will see that after price moved and tested the 1.26300 level, we saw buy pressure resume from that area. So I hope you moved your stop losses accordingly. Personally, I moved mine to break even, and of course I was taken out at a break even on this particular one, and I do hope you are taking out in that same perspective as well. Now, this morning, while I was trying to decipher what will be happening in this market, I noticed that there is some deep buying happening during the Asian session, leading to the situation where price action has moved back up into our entry point area. And as at the time I published my commentary this morning on all my platforms, I did said that if price comes back to retest the 1.2665, we will be buying this particular asset and look out for more opportunities at the breakout of the resistance line. Now, the idea behind this momentum is not short of the recent weaker US dollar and of course diminishing US Treasury bond yields in the in recent time. Now the market participant now look forward to tomorrow's release of the United Kingdom inflation data for Qs in this market environment, and as a result of this, we might not be seeing aggressive bets today or anytime soon due to these expectations from yesterday. But if the major key players in the market begin to get an hint into what the data will look like, definitely they will be building a position ahead of this event. And of course, as technical traders, we will see their trails on the chart as price action. Now, adding to the depth of the pound sterling's recovery, the Bank of England's policymaker, remember we talked about Ben Broadbent having a speech yesterday, and during his speech yesterday, he did emphasize that the Monetary Policy Committee remains vigilant, requiring clear and sustained signs of declining inflation before confidently identifying a downtrend. Now, what this simply means is that he is aligning with the Bank of England's governor's affirmation that there's still likely going to be another rate hike on the from the Bank of England. Now, this is more or less a positive narrative for buyers in this particular market, which of course will definitely support an uptrend scenario. Now, if we look at things from a technical standpoint, following the retracement move that started last week Friday, remember we talked about this retracement move, you will see that price action appears to be transitioning into a reversal pattern, maybe a head and shoulder, a inverse head and shoulder pattern where we have the head right here, and then price action may transition into the right shoulder where the resistance line of that range we identified at the beginning of the week, exactly at the 1.2700 area, could be serving as the neckline of that reversal pattern. Now, this is just a projection, yet we never can tell. It could turn out to be an inverse head and shoulder pattern, and in fact, it could just break out of the 1.2700 area outrightly. So, at this point in time, I hope you have your buy positions running right now as we saw price action come back to retest the 1.26650 level as I projected in my commentary this morning. Now, as it is right now, we'll continue to look out for more buying opportunities as a breakout of the 1.2700 level will be welcoming more buy positions. So I already have a buy stop order based on the fact that I've been profitable. At the time price gets into that area, I will be in profit of about 35 pips. Then we can afford to place a buy stop order above that area. And if price action continues to climb new highs, a breakout of our key level at the 1.27350 will welcome more buy position. But one thing I would like to mention here is that as soon as price gets into the 1.27350, please let's ensure to move our stop losses accordingly, secure the current buy position, as depending on what happens here will determine if we will continue the uptrend move. Now, the reason why I have said this is simply because of the key level we identified here, which was broken to the downside last week Friday as a result of that retracement move. Now, it could turn out to be some selling pressure around this area to incite a downtrend move. Of course, it could happen. So let's keep an open mind as regards to that expectation as well. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you update as at when due. Now, in as much as we're looking forward to the second leg of the bullish momentum that started last week Wednesday, we still cannot ignore the potentials of sellers as well. And like I usually say in this community, we want to keep our options as open and as dynamic as possible. Now, if it so happens that this bullish momentum we are in right now gets taken out at some point, and price action continues to drop to the downside, then I would like to see price break down the lowest point for this week at the 1.263, retest of structure to join the decline to the downside. Now, while we join the decline here, we should also note that we are within a potential demand zone, which we identified yesterday, which also shares a beautiful confluence with the 1.2600 level and of course the ascending trend line we identified on the higher time frame. Now, I encourage us all to watch my videos on the GBPUSD. If you have not watched it, the links are right in the description box of this current video you are watching, so you can see things from an holistic perspective. So if price drops below that area, then a retest of structure could confirm some selling opportunity, and as soon as price gets into the 1.26 area, ensure you move your stop losses accordingly, secure your positions while we wait and see how the market would react to that particular zone. But I doubt if this will happen today. Sincerely, I doubt if it will happen, but you never can tell. The market can do the opposite of what you are actually thinking. So we'll keep our options open as possible, but I still maintain a very strong bullish bias on the GBPUSD. So this is my view here on the GBPUSD, holding on to my bullish momentum and waiting for a more opportunity to buy above the 1.27 and the 1.27350. So let's see how this will play out in the next couple of hours, and I will definitely be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So if you have any questions, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off, waiting for your comments and questions before we move on to the last asset on our watch list. You can use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. I'm very glad you found the session helpful in your proficiency in price action analysis. Forex Master, I saw your comment. I'm very glad you found that, and you can also build on that by practicalizing this on your chart too as well. So in the absence of no further questions, I want to assume that we are all on the same page and you've marked out these levels as I advised, and if that's the case, then we will be moving on to the next asset on our watch list. Please do not forget to click the like button if you have found this video on session helpful in making your independent trading decision and in your proficiency in price action analysis. Kindly support this project, allow this help this community grow in that regard. Just by clicking the like button, you have done the best thing ever for this particular channel, and thank you very much as you do so. So the next asset on our watch list for today is my favorite asset, which is the XAUUSD, popularly known as the gold spot. And in fact, we are in a decisive situation right now. Price action still remains above our ascending trend line, and of course the buy positions we took advantage of yesterday still remains very, very intact as gold prices struggle to build up on yesterday's bullish momentum, especially during the Asian session. And the prevailing robust risk on sentiment in the global equity market, driving US stock indices to near record high on Monday, adds pressure to safe haven assets such as the gold. However, the geopolitical tensions remain a significant concern, especially amidst growing apprehension about potential global economic slowdown, particularly in China and the Eurozone. This could potentially strengthen safe haven assets and deter bearish traders from making aggressive bursts to the downside. Now, at this point in time, we are in a limbo right now where majority in the market will definitely want to be looking forward to the US inflationary reports, which is scheduled for Friday's trading session before making any significant decision at this particular juncture in time. So what this simply means is that we might be in for a long consolidation phase in this market, but within that long consolidation phase, I'm of the opinion that there's going to be some series of higher highs and higher lows within that consolidation phase to give us an insight into the strength of the buyers. Now, with all these fundamental factors in mind, let's look at things from a technical standpoint. What is really going on in this market? Now, I would like to state here again that for those who had missed out on my weekend videos on the XAUUSD, it is very, very important that you watch these videos, as it will give you a background knowledge of how we got to the point we are on the 1 hour time frame. So going back into the chart, remember we had our key level situated at the $2,030 area, and we talked about how this level had played a major role in pushing price to the downside since the month of April, May, or June, I think. I can remember. But in this regard, we also talked about this bearish trend line as well, which we identified on the higher time frame. Please watch that video. You get to have an holistic perspective into what is going on here. So we talked about this descending trend line, and in fact last week Wednesday we saw price action broke out of that descending trend line, and in fact it came back to retest and even close exactly at the point it tested that as descending trend line on the last trading day of last week. Now, as the new week began, we saw buy pressure resume exactly from that ascending trend line, and it resulted into price action confined within the range of the $2,024.80 level and the $2,016.10 area, giving us a flat channel to work with. And you know how we use our flat channels in this community. We want to exercise patience and wait for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line of that flat channel to give us an opportunity to sell. And one interesting thing about the support line of the flat channel is the fact that it also shares a beautiful confluence with that descending trend line. So if price can break down the support line, we might be back into the seller's territory to incite a downtrend scenario. But of course, that never happened, hereby negating any idea of even considering selling this asset at all. But instead, we saw price action break out of the resistance line of that range multiple times yesterday, and in fact we saw that huge move to the upside where price moved about how many pips was that? About 90 pips before price action came back to the downside. So I never had the privilege of moving my stop losses at all, so my buy positions are still intact and running at this point in time. Now remember that we identified this ascending trend line yesterday, which we said we will be using to guide our trading decisions going forward. I think we identified this during the XAUUSD live window yesterday. For those who are part of that session, you must have noticed the emergence of that ascending trend line, which captures the series of higher lows. And you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we shall feel comfortable in our buy positions, while we also look out for more buying opportunities. So as it is right now, we maintain a bullish bias. Now, for those who are yet to capitalize on this opportunity, well, you can have your buy stop order sitting above the $2,030 area to add more buy positions to the existing trade. And then we have another level had the 2035, but I don't want to use that area. I would like to use a round figure instead, and of course give enough space between the second entry and the third entry. So we have the $2035 area as a new level that we can use to maximize this uptrend continuation if price action finds its way to find new highs. So mark out that one too as well. $2035 level, a good psychological area to look out for more buying opportunities. Now, in as much as we are looking out for buying opportunities in this market, you know how we do it in this community. We also want to keep tabs with the opposite direction as well. Remember, this market has been bearish since last week Friday after price action testing the 2043 area, giving us a situation of profit-taking activity ahead of last weekend. Now, if this bearish momentum continues, what will make us feel comfortable joining a bearish move? Well, first of all, this ascending trend line needs to be breached. That is broken to the downside first. Then at this point, then we can now start saying, okay, let's look out for ways through which we can capitalize on some selling opportunities. Remember, we are not joining the breakdown right away, as we will need to see some confirmations happen to further emphasize that sellers may likely be dictating the pace going forward. Now, what I want to see here is something like a breakdown of structure and price coming back to retest this level at a $2024 area, and of course the ascending trend line. And what we do want to be seeing here is signs that buyers are finding it difficult to climb back above the ascending trend line. And if this is the case, then we can now look out for selling pressure, then join the decline and have a sell stop order below the $2016.10 level, which happens to be the lowest point price action has been for this week, to join the decline to the downside. So that is the only condition that will make us want to consider selling the XAUUSD for today. But besides this, we still maintain a strong bullish bias on this particular asset. So this is my simple view on the XAUUSD for today. I do hope I made myself very, very clear. And in fact, if you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next couple of 5, 10, 15 seconds off to see if there are any questions before we start rounding off for today's trading session. So just in a moment, I just dropped the link to the XAUUSD live window right in the comment section. I just pinned it at the top of the comment section. So you want to be clicking on that link, click on the notify me button so you can get notified as soon as we come on live. Now, for those who are joining us for the first time, or for those who do not know what the XAUUSD live window is all about, well, this is a platform that was born out of a popular demand from this community, as we all come here together during the New York session to monitor real-time price action on the XAUUSD. So the XAUUSD window usually kickstarts 5 to 10 minutes into the New York session, and it lasts between 5 to 7 hours depending on the tenacity of trading activities for that day. So I encourage you to be part of that session, and of course let's make it an event by commenting in the comment section, and let's see how today is going to be running. So on the XAUUSD, we maintain a bullish bias. Let's see how the market will play out during the New York session today. So I can see your comment here, Raja BD. I couldn't agree more. I learned a lot from this session. Oh, you're very much welcome. I'm very glad you found it very, very useful. And I look forward to seeing more of you here. Cyrus Limo says, following, thanks for the ints. You are very much welcome. Thank you for supporting the project. I hope you've clicked on the like button. Please do. This is the only way you can support this channel positively. Thank you very, very much as you do so. So with that being said here, and in the absence of no further questions, I'm of the opinion that we are all on the same page, and all that has been said is quite clear and understandable. So in that regard, we shall be rounding off for today's trading, for today's Forex Morning Mastery, as we were able to attend to 3 major financial assets, which is part of the asset on our watch list for this week, which includes, we talked about the USOILSPOT, the XAUUSD, which is my favorite, as of course, and then the GBPUSD, all of which we were able to identify simple trading setup using only fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action today. So I do hope that we all marked out these levels on our charts, as we will be needing them to guide our independent trading decisions for today. And with that said, please ensure that you exercise patience and allow your structures to mature before you jump into any positions. And remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So what this simply means is that you want to be having a well-defined risk management strategy that will be consistent with all the trades you take from your portfolio. So on this note, I wish us all the best of luck today. And that reminds me, for those who are joining us for the first time, I do hope you are able to gain 1 or 2 things from what we did here during the session. And if you did, you of course want to be part of the subsequent editions. Trust me, the more time you spend with us here in this community, the better you get to understand this analytical approach and eventually be able to use them to guide your independent trading decisions. So I wish us all the best of luck once again. Trade smart, trade consciously, and see you all in the comment section of both my TradingView Telegram platform and of course during the XAUUSD live window as we continue to monitor price action. Do have a wonderful evening, everyone. Bye bye.